As investors, it's our job to have a plan for all directions of the market, the ups, the downs, and the sideways. And it's most important for us to remain flexible in how these plans can unfold, because none of us control the market. The market can control us if we are not flexible in our views. So we're going to look at the positioning of Bitcoin and cryptocurrencies as they currently stand, why I think that we may be in for a accumulation at these levels or a potential correction. But that doesn't mean that I'm not extremely bullish for the macro picture and how that looks on a chart. So let's smash in to the video. But if you could first gently like the video up, subscribe to the channel, and of course use the links in the description down below for Instagram and Twitter for the official links so that you don't get scammed over in those social media platforms. Also, you can check out the Patreon link down below if you want to learn more about trading cryptocurrencies and investing long term. And there is the Investor Accelerator Premium, which has the structured course for trading. So the first chart I've got here is Bitcoin. Now, the main thing I'm looking at here is repeating ranges. So we have repeating ranges in time and price. And then this gives me an idea of what I think will happen in the market next. And it doesn't mean that it will happen, but at least I have a roadmap for it. And if you've been following the channel for some time, you know I always look at roadmaps to give me an idea of what may happen next so that I'm not caught out too badly in case something wildly drastically happens, right? So at the moment, the main thing I have here is timeframes for price distances and time frame distances as well. What the hell does that mean? Okay, so price, we're looking at from the lows to the highs. That's pretty simple. So we've seen about $23,600 from the first range. So it's important to understand where the ranges are and how you are calculating those. The other thing we see is around 7 bars. So this is on a weekly chart because I want to get a macro picture. I've got 7 bars, about 49 days. So 7 bars up before we had the correction, and the correction was around 3 weeks. What are we seeing at the moment? Well, first we saw 4 weeks down, a little bit up, and now we see the next week up. So that gives us 7 weeks into this next range. So if the market is to repeat identically, then we should possibly see a correction here, or at least a sideways period of further accumulation. Of course, it is possible that it just goes up again the following week, but we're just looking for ideas of where the market could potentially find some resistance. The first range I have here this is my 100%. So I'm using this price range to give me an idea of where the market might move next. And we saw it hit 100% and retrace. This is a really good sign. So it's repeated the first range. That's bullish. And then what it did is went a little further to 125%. You can see it did dead on 125. It doesn't always happen this cleanly, but $100, $200, it's not that far off. And so this is a range that is extending in the bull market. So this is what leads me to say that I'm very, very bullish for the macro picture. But as always with markets, they need this period. They need a time to rest and recover. So will that happen next? At least I think maybe another week or two. I'm planning for that. If it doesn't, then I would expect the market to race up to around that 75 to around 77,000, keeping within this price range here. But why does the market do this? Why does it run up, go sideways, and then retrace again? Well, you got people buying at the lows, selling at the highs, or within that period there, trying to take a chunk out of the middle, like we often talk about. And that comes down to things like the Wyckoff price cycle. You have oversold, so the market's down too low. You have overbought, so the market's up too high. And then you have the markup and the mark down. So if we look at here, to understand these cycles, we want to study the price action, the volume, and the time. So we put a lot of emphasis on the volume here. And so that's the next piece I'm looking at. I see the volume just coming down a little bit. We should be picking up as we break through to new highs. Like we can see at the lows, you see a lot of volume picking up at the lows to give you an idea that there are buyers coming into the market to hold the price up. And then at the tops, maybe you don't see the volume come through. You can see that the volume is lacking a little bit because the buyers aren't coming through again. They came through here to support the market. They came through when the market is trying to head up, bringing in more volume, so more people are coming in to buy. But at the moment, volume is not doing too much. So it looks like people are sitting on the sidelines. And this also goes along with some of the news that's out from Glassnode looking at the supply on the exchanges. Glassnode's analysis revealed that the daily net withdrawals from exchanges had reached an average of 5,000 Bitcoin. So we know that there is 900 Bitcoin being mined every single day. When you do the maths, there's about 6 blocks every hour, one every 10 minutes, 6.25 Bitcoin are mined every 10 minutes. Total is about 900 per day. So they write that despite hovering just below all-time highs, on-chain activity remains only marginally above bear market levels. So if we have less Bitcoin on the exchanges, then that can lead to higher prices quite quickly. But we need the buyers to come in order to push those prices up. So that's how I'm remaining long-term bullish. I still think that this is going to happen. But in terms of cycles, you have these swings, these ebbs and flows, which naturally occur. Demand greater than supply. We don't see that just yet. We're waiting for that demand to come in to push these prices up. But in the meantime, we go through an accumulation period. And so we're waiting for all of the accumulation to take place, more of the Bitcoin to come off the exchanges and more people to buy it before it can start to push these prices up. This observation of prices near all-time highs, whilst on-chain activity is near bear market lows, is quite a remarkable divergence. It speaks to a convincing case where the market is still likely still in the quiet accumulation phase. Some of you guys might be familiar with this schematic here. So we have the accumulation, but we can also have accumulation at all-time highs before the market starts to take off again. So it doesn't mean we can't see further declines. You can see within the accumulation, get a bit of a bouncing around, and then some declines. There are multiple different schematics when it comes to an accumulation, but the main thing is that we're going into a potentially sideways period to bring some more demand in, and then we look to take off. So as for the Wyckoff steps, we have the accumulation, the distribution, time to buy, time to wait, time to sell, and then the cycle repeats. So the accumulation happens, get the market pushes up hard, then they distribute, then they sell off, and then we repeat the cycle. So there's times to wait as well. And so if we look at the total market cap, so all of the cryptocurrencies, I'm looking at the similar sort of thing here. I'm just going through and measuring ranges. So I see the low, I connect it to the high, and I say, well, that was 7 bars. What are we doing right now from the current low? Well, we're up about 7 bars. It doesn't have to be exactly 7 bars the next time, so 7 weeks, but it can be around that, 6, 7, 8, something like that. Doesn't mean that we have to come right back down as well, but if we see a sideways accumulation above the old all-time highs, that's an even stronger outlook on the market, because we're seeing it move up, then we're seeing it accumulate at high levels, which means the demand is coming in at higher levels before we start the next move up. So this is still a bullish sign, even if the market gets boring for the next couple of days or weeks. In the past, I've seen 3 weeks. Maybe we'll see it similar. Maybe we'll see about half that period, 1 to 3 weeks within that zone. But eventually we will probably get the move up. So although we're at all-time highs, and this is normally the time when a lot of people are FOMOing into the market because they see those figures come up, just like we see with Bitcoin, punches up past the old all-time highs. It got to 67,000 just 4 weeks ago, and now we're currently seeing it at 69,000 at the tops. That brings a lot of new people in. They buy, they get impatient, and then what happens? They sell out because it's not moving for them, and they're wondering why things aren't moving when it was just moving a few days ago. So they get caught out in this cycle, and the cycle repeats. It continues on and on again. Let's look at a few more examples. So I've gone through Ethereum and a lot of the other smart contracts in the top 20 cryptocurrencies. So we've got a few to look at. ETH gives us a similar sort of time frame, low to the current high, about 7 weeks, because the markets tend to move pretty similarly. Then we have the low of July to the previous top. That was about 6 bars. Again, 3 weeks down. And so if we get that repeat, I'm looking for about that 1 to maybe 3 weeks. So I'm also seeing that the volume is starting to drop here. If I take it off log, you can really see we had a nice move up. We missed the 100% at around that $5,000. So that's slightly weaker at this point. I wouldn't mind seeing ETH at least punch up to around 4,900 or 5,200-ish just to get us past that mark, and then have its rest period so it can reaccumulate and move again. The other chart I have here is BNB. It's done the same thing. We moved up, rested, moving up again. Similar sort of time frames. So we take it from the higher low, it gives us 5 bars. But if we take it from the major low here in June, 9 bars. Then we rest, recover for about 3 to 4 weeks. We move again to this high. That gives us 6 bars. So it's one of those times, like I've got something in the title, that I think that it's probably a time to correct, or at very best case scenario, is to go sideways for a period of time to rejuvenate the markets. So the actionable steps here are to look for markets which are winding up. And as an example, I can look at something like XRP. Now, I'm not saying to run out and buy this thing, but if you see the sideways accumulation periods and then eventually you get the pops, it looks like we're heading into one of those again. Now, this can continue to extend out past the triangle I've got drawn here. It looks like it's waiting on that news event to come out from the SEC, but you can start to see that there are higher lows and the highs are trying to get higher as the demand comes in to meet the supply. So XRP is one that remains on my list, and I talk about it with the guys in Patreon as well. So when I get the dips, I like to buy this one because I'm patient and waiting for a longer accumulation on something like XRP as I follow one of these Wyckoff schematics, just waiting for the movement out of those periods. So patience is a big one as well. Let's continue on with the smart contracts from the top 20. Solana, big one on the channel, looking at it at around 25 to 30 bucks. Buying this thing, we're at 10x now. The low to the first high in September, what do you know? 7 bars. We had a nice clean 7 weeks up. Then we went sideways, and now we have moved again from this low to the current high of about 6 bars. So we had 1, 2, 3, 4, 5 weeks in the sideways period, but if you want to measure it from the low to the high, so that's the move, about 6 weeks. So it's only natural that the markets move with so much energy for a period of time and then they rest. It'd be like running a marathon. You have a period where you run, then you have to rest, and then you come out for your next marathon. Or you could look at it like a sprint. You want to sprint for 7 weeks, rest for a period, sprint again. Another case in point, Cardano ADA. We had 6 weeks from the July low to that September top, and now we're down for about 8 to 10 weeks. So the low here is 8, but we're still underneath the all-time high of 10 weeks now. But we're still trending around the 50%, so we are nice and balanced at this point in time. Also on the list is DOT. DOT had a nice run from the July low to that September top of 8 weeks, and the current move up from the low in September to the high is 6 bars. So we've pushed to new all-time highs, we've come back under them, but we could be looking for a sideways accumulation at this period after we've met our 100% target, and then the next target around that 61 bucks to get us to an extending range before we then move on to our next targets that we can measure from the correction. Also on the list, Luna. Luna is a little bit trickier in my opinion because we're seeing lowering volume with the prices increasing. And this sort of chart looks very similar to what we saw on Bitcoin through this period. Imagine you can't see all of this from around April. So if we take this, drop a line on it here, you can see that this is kind of similar to what we're seeing on Luna at the moment. And what comes next? Well, we know from Bitcoin in this sort of pattern, it tends to tank. So Luna had been moving pretty strong before everything else and has done really good gains. Does it need a correction? I think it does. If at very best for Luna, we get some accumulation at these higher levels, just above all of the closes. So if I bring the candles out, you can see the closes were around 40 bucks, $42. So if it stayed around those levels accumulated, then it could find some more strength to move to new highs without having to go into a massive correction. Bullish for me. AVAX, still looking at these highs. It's moving up. Again, volume has started to drop off a fair bit and the moves are getting smaller. Okay, so that's a big one to note. You can see these moves up around 755% or $70, 9 weeks. The next move, if this is the top at the moment, a short-term top, then we see 4 weeks of 90% and only $46. So the time frames are getting shorter, the price ranges are getting shorter, and the volume is getting lower. All you have to do is go back to Wyckoff and the laws here, looking at time, price, and volume, matching these up, studying price action, volume, and time, and then you create the pattern to see what is potentially coming next. So I definitely remain long-term bullish on Bitcoin, but I am very much aware that we can have some sideways periods, so I don't need to rush out to buy anything at the moment. I'm waiting for my levels to be hit, and also then mention those on Patreon, whichever trade alerts I'm looking at, the cryptos that are in my portfolio, which you guys see in Patreon and in Premium. Put some alerts out for those when I'm looking to buy them based on exactly what I just talked about there, looking at Wyckoff, price, volume, time. And of course, you guys can stick around at the end, click on the videos after this video to get a bit of an update of what I'm seeing with Bitcoin, best and worst case scenario, crypto portfolio strategies, and mistakes to avoid, which is the shuffle. When you get bored of whatever it is you're buying, then you shuffle to the next crypto. That can be extremely damaging in bull markets. So don't get stuck in that. Go and check out these videos after this. Like, share, and subscribe to the channel right now on our way to 250,000. See you guys in Twitter or Instagram, official links in the description. Use those, or I'll see you on Patreon, which is limited at the moment. Catch you guys at the next video. Until then, have more fun to get more done.